another episode of Commercial Property Roadshow. So, second episode on commercial property for 2023, and the market is continuing to track. And like I said, in about mid-February, we're going to be able to see some of the auction houses and the yields, and we're going to see what this year is going to be like, or kick off this year. But before then, there's a lot of questions about now, is this the right time from changing from residential to commercial as a strategy, or as to build your portfolio and to add more cash flow or growth, and you can continue to, should you be building it that way? Or should you hold onto your residential, or should you hold your commercial? What should you be doing, right? So this video is really about sharing with you how that transition works from commercial to from residential to commercial, and whether commercial is a better option for you right now in this current market, or should you just be holding. So as all things, it doesn't really matter to me as an investor whether you're doing commercial or residential. I'm not against residential. I am not just pro-commercial. I think anything that it gives you positive cash flow, anything that can continue to build your portfolio, anything that can continue to give you growth, allows you opportunities in the market, allow your portfolio to continuously grow, that it doesn't matter what strategy, where you're investing the money, that's what you need to do. You need to keep going. Anytime you're sidelined, anytime you have to sit out for a couple of years or more, that is where you run into the danger of stalling your portfolio, not moving forward, not really going to the next level, right? And that's why it's so important to keep your portfolio going. And that's why we're looking at residential converting to a conversion or transitioning, let's say, to a commercial portfolio. So one of the things that commercial property does is it gives you cash flow. Even in this current market, the interest rate in commercial is sitting somewhere around 5.5% to maybe be 6%. And next time I'll actually interview one of our finance brokers in the next video, so that you can get an idea of what the current market is doing. But the 5.5 to 6% in terms of cash flow commercial property means that you are still making money, even if you buy into 5.5 to 6% yield in a metro area. So Brisbane, Melbourne, Adelaide, ACT, Gold Coast, Sunshine Coast, if you're buying between 5.5 to 6% yield cash, pure net cash flow yield, none of these gross things that the agent talk about or semi-gross things, but pure net yield, you are still going to make some money after you pay the mortgage. Now, it won't be a huge amount of money, but you're still able to support the mortgage, so the property's still able to pay all the outs, support its mortgage, and have a small positive cash flow coming through. Won't be a huge amount. Obviously, if you go to regional Queensland, Victoria, or New South Wales, we're going to hope for that we are going to be hitting 7s, pluses, and maybe in rural areas or smaller regional towns, you're going to hit your 8s, right? And that is where you're going to get more positive cash flow, significant more, and that's going to service both your deposit as well as put money into your pocket. So that's the ideal situation if you're looking for cash flow, especially if your residential portfolio, all of a sudden you're doubling your repayments because interest rates has gone up. You definitely need to pull out all the equity you have, or any money you sit in the offset. Don't leave the money in the offset, but put it into a commercial property so that it can support the debt on your residential, but also give you a small positive cash flow window. But the other thing it does is it allows you to have growth on that money, whereas the money is stuck in your offset account. It won't actually let the money grow, which means that it's going to get hit by inflation or deflation, if you like to call it, but you are missing out on any type of capital growth, even if it's 2-3%, right? Let alone if you buy in metro areas, you were looking at 5 to 8% on average of capital growth in commercial property per year, right? As an average out over 10 years. So if that's the case, that is the reason why you can then continue to grow your portfolio, because you get the two lots of growth, one from your residential, one from your commercial. The commercial will support the debt on your residential, and you can continue your portfolio growing. And that's why you would transition or take out some of the deposits or cash or equity you have and put it into commercial, right? If that's what you want, there'll be a link below how to reach out to us and we can help you with that. But that aside, if you are going into developments, and let's say you bought a resi and you want to renovate it, you want to refurbish it, and you want to knock it down, or you want to extend it, build a granny flat, and you're thinking of that, and you're wondering whether that's right for you now, then think about that, doing the same thing but in an uplift in commercial. Now, you obviously need a lot more education, you need a lot of support through that, you need someone to be able to guide you through it, but in doing it, the uplift in commercial at this moment in this market, it's a lot less risk than developing a residential property, because the banks at the moment is scaling back on the residential, which means it's more expensive for you to do the deal. So as a result of that, what you'll find is that it's going to be for you to be able to buy land in residential or extend the current land with the rising cost of building and also the lag time, the holding cost. That's what's going to kill the deal, your profitability in residential. If you switched over to commercial, when you do an uplift, what you find is that yes, in the beginning you have the similar holding cost. Yes, you have you're up for the similar sort of trade kind of costs as you would for residential, probably smaller because you're not doing a lot of the high-end refurbishments to get the value up. So you're doing a basic kitchen, a functional kitchen, a mezzanine floor, a need, whereas you're doing beautiful tiles, beautiful kitchen appliances and everything in residential. So in commercial, you're putting in a new tenant, you're refurbishing the property. Yes, there's going to be some holding costs, but once the tenant goes in, that holding cost totally disappears, right? You are positive and more. And if you are looking for the magic 8%, 8% is what I think the magic 8% is what the market is looking for. If you're looking for that 8%, then absolutely doing the uplift in commercial is the way to go right now. It's actually a lower risk than doing developments. The banks are a lot more friendlier than residential. You can get loans secured against the property. It is higher interest. It's about 2% or a little bit more than 2 to 3% above what the current market is, but it allows you to get in with 30% deposit. They give you 70% against the property. So there's varying rates. You just need to realize how much the holding cost is. But typically you will still get anywhere from 20 to 40% in terms of an uplift in a commercial property when you're doing uplift. When you actually compare it with what you're getting in residential. In residential, it's probably the same, but the timeline is longer. The more money you put into it, and the holding cost is going to eat into that 20 to 30 or 40% profit. Where in commercial, in that 6-12 months time, you're going to get the tenant. Now you have that holding cost covered. Every other uplift, little tweaks above that, it's going to be money coming in, cash flow, and growth coming into that property, right? So right now in this current market, the opportunity is really to do for more uplift. You're going to get the same results as you're doing a build in residential. So if you are thinking of a build, consider the uplift, right? And finally, when shouldn't you transition from, you should hold on to resi over commercial, right? And one of those things is about where you are in your life stage. If you are in your 20s or if you are in your early 30s and you're thinking, look, cash flow doesn't really matter to me as much. I really want a lot of growth, right? I want a lot of growth. I'm working full time. I can definitely support a property portfolio. I can support negative property portfolio as long as I get to grow. Then you would find that by holding residential, you are actually going to grow faster than commercial right now in this current market. Now, commercial will grow. Commercial has grown exponentially in the last 2 years, but the next 2 years, the opportunities is in the uplift. The opportunities buying well in metro areas and capturing that uplift. But when you come to a faster turnaround in terms of where the market is scared in residential, you can buy really under market, where you can get the uplift by doing maybe some renos, especially in not so much maybe in a Sydney or Melbourne where we're being really sort of hit with interest rate, but maybe in your regional areas when you can actually buy properties for 500-700 or even 300,000, doing a minor uplift and then increasing the property just a little bit. So as a starter, especially if you're starting out, a residential is going to be faster to give you that uplift compared to commercial, and you should definitely basically cut your teeth on the residential before you move into commercial. The other thing is, if at the moment you have a lot of properties, say that you have a lot of residential properties and that you're really stressed and you just cannot access the equity because you can't service anymore, this is really a time to look at selling your residential property, and especially if you bought a long time ago, if you can sell it, release that cash, and then looking at either putting that into commercial to get more cash flow to balance out your other, to access your other equity in your in your group of properties, or basically releasing that cash so you can do more uplifts on your residential property. on your residential property to maximize the value. So if you've got underperforming residential properties, it's time to maximum the value. Then maybe, looking to sell once the interest rate comes down a little bit. So if you're in that position and you're just finding that all that servicing, you're just sort of locked in and you really don't have any where to go, you want to be in a position where you want to tidy up your residential property before you launch into commercial, so you have plenty of equity and you can accelerate fast, then I definitely suggest that you stick to resi for the moment, see where the market is in the next 6 months or so, and then looking at getting into the commercial property space. But do know your strategy. Do know why you chase commercial, because remember that residential is a growth game. You're always feeding the machine to get the growth. Commercial is a cash flow game to start with, and as you get cash flow, you can slowly tweak the value of the property, right? So it's cash flow first before growth. Residential is growth first before cash flow, and the difference is from one single $1 million property, getting $100 in positive cash flow from a residential versus on a say. Versus $1,000 on a commercial property. So when you come head to head, you're thinking, well, $100, that's $5,000 a year. Commercial property, I could be getting $50,000 a year, right? Positive cash flow, and that's the major difference. And you got to know, is cash flow more important than growth right now, or is growth more important? And it depends on your stage in life. If you're younger and you're starting and you just want to accelerate that, you would find that being active in the resi space is going to give you more benefit. But if you already have a lot of equity and you want to just go into commercial and start balancing that out, jumping to commercial 2023 is your year. Massive opportunities, uplifts, set and forgets. There's areas we can position yourself for growth in the next 12 to 24 months. So if you want more information, reach out to me, Helen Tarrant, Unicorn Commercial Property. Link below to my book. So really do order my book. That's going to give you all the strategies that I've talked about, compare residential and commercial in the strategies, and also show you how to invest in different areas of commercial property. But also there is a calendar link down there if you want to book in a strategy session. Please do have a strategy session with us and let us personalize this journey for you. So until next time, I'll see you at on this channel, but we're going to talk about financing. And until then, keep hunting. See you in the next video. Bye for now.